you could, and you could have a transition. But the odds of that, after having a little experience in Washington, I would say the odds of that happening are probably 0%. They're just not going to do it. But if they cut back on spending, remove the need and a desire to monetize debt, shrink the size of government, live within our means. A person and a company can do that, and sometimes they have to. But markets eventually force people to do it, and they force governments to do it because debt gets too heavy. And you can't just adding new debt. People give up on the currency, and it doesn't solve the problem. But the market is it's too much. It's too much. You're spending too much. The system just doesn't work. So when they do that, then they bring on a crisis, and there will be liquidation. See, take a country like Zimbabwe, there's liquidation, goes to zero. How do you wipe out a debt? And that's one of the reasons we have constant inflation, because it helps the government, because they pay off all their debt with cheaper money. So if you can get a 50% depreciation of your dollar, which we're quite capable of doing over and over again, actually the real debt goes down. But eventually that ends, and then it loses control. But the dollar in the United States has been blessed with some benefits that we don't deserve and are not wise. It just causes the bubble to get bigger and bigger. I think we have probably the biggest financial bubble ever in history worldwide, because we have the reserve currency of the world. We have been a wealthy country. We've had, an instinct for free markets and sound money. Although we don't follow them anymore, we still benefit from its history. But what we've witnessed now in the last several years, for a while, the debt didn't seem to be so bad. But all of us, $36 trillion? It makes no sense whatsoever, but that's the market speaking. And the other big fallacy that markets speak to eliminate these problems is it takes away from the Federal Reserve and other people interested that want to fix interest rate. So it's the interest rates that give us the most important information for anybody involved in business. And that tells a lot of people what to do, what the investors, the savers, and the spenders, and indicating what is happening. But, interest rates can be, for government, 4 or 5%, but they had them lower than that, but eventually the government starts pushing things up. But, I think the real interest rate is the money under the circumstances of people who are having a tough time, and more people are. And that's when interest rates for them is 20%, on the credit card. That's telling them what's going on here. But nobody knows exactly how long it'll last. It probably, intellectually, you say they don't deserve that much of a blessing on all this free money and free wealth, because it's nothing more than a fraud game. It's counterfeiting. You steal wealth, and this is the reason. And it's very tempting. It's an addiction. And a lot of people have to be sucked into it because they believe they're going to benefit by the government sending them more money, which is the problem.
It was only yesterday in the span of human history that the dollar was removed from some form of gold backing. And a lot of people have pointed to the issues facing America economically today being tied to that event. Would you agree with that? And do you think there is any possibility of the U.S. returning to some form of a gold standard, whether that's fully backed or partially backed by gold?
Yes, there is a chance, maybe after a great crisis exists. But if you wanted to, work a way back, you could start by government selling bonds backed by gold. And it's temporary. I sort of I like it because it's emphasizing gold, but it's not the solution. The solution is we have to curb the appetite, for big government. But you mentioned there was a time over our history where, essentially there was a definition of the unit of account. We don't have the definition of a unit of account, and yet it runs the world. in spite of the challenge to the dollar, which probably will continue to increase, it's something that they can't stop from happening because the market is demanding, what's happening. But when our country started, it was accepted that gold was essentially, for an ounce of gold, to say $20 an ounce, and that's how our country started. And then we had a Federal Reserve System, and they said, well, we're going to have it at $35 an ounce, and then the money, and they proceeded. But there was always, even when the United States, we weren't allowed to own gold. Those were the years I was interested in money for a lot of different reasons, and in the financial system and the monetary system. So when they, kept spending, after World War II, even Henry Hazlitt said, this IMF and all this thing can't work. It's gimmickry too. And he was right. And they said, we were going to tell the world, the whole country, the whole world, if you maintain a currency and link it to gold and make all your international transactions with the dollar, we will do that. So it was $35 an ounce. But when I started reading about this even as the late 50s into the 60s, people were already saying, we're printing, but we were buying up the empire. We were building an empire. So, and nobody was calling us on us. They just let us do it. So we kept printing all that money, and the predictions of the 60s, were what I, watched carefully. And I believe the people who were doing the warning, 68 on, there was sort of a side market for gold. It wasn't $35 an ounce, but it was inevitable that they could not maintain this fictitious gold standard. And I can remember it dramatically for the moment that ended. And that was when Richard Nixon gave a speech on Sunday night. I was watching television, and I sort of, wow, this is it. And that is when I was motivated to start talking about monetary policy. And that, weirdly so, guided me toward at least putting my name out there for running for office, which I did as a lark, and a chance to talk about what I saw coming. And so that was when, gold no longer could be $35 an ounce. We had always guaranteed that with foreign holders of dollars, they'd also, and then the French came in, and they started taking all our gold. So we had to close the gold window, so we had a little bit left over. And to me, that was a huge event. It still is a huge event, and more people, are talking about August 15th, 1971. And if you look at the charts, they're very dramatic on what happened to money supply and prices. It's amazing that it's been held together, and the trust has been placed.